Imagine a country with the world's largest oil reserves. More oil than Saudi Arabia. Citizens getting free gasoline, free education, free healthcare. In the 1970s, it was Latin America's wealthiest economy. A country that attracted immigrants, not exported them. Now fast forward to 2025. That country's inflation has exceeded 1 million%. Yes, 1 million. $1 million worth of currency can't buy 3 eggs. Citizens are scavenging food from garbage. Doctors are fleeing the country. And the government keeps printing more money, thinking that will fix the problem. This is Venezuela. And this story is an economic suicide manual that any country, yes, any country, can follow. Because the pattern is always the same. And once it starts, it cannot be stopped. In the 1970s, Venezuela was Latin America's success story. Why? One word, oil. In 1914, one of the world's largest oil deposits was discovered at Lake Maracaibo. By the 1920s, companies like Shell and Standard Oil rushed in. The moment Venezuela started exporting oil, money poured in. By the 1950s, Venezuela had higher per capita income than Spain, Italy, and Japan. The capital, Caracas, filled with skyscrapers and highways. The thinking was simple: oil money can buy anything. The government spent oil revenues generously. Social programs, free education, free healthcare, low taxes. Gasoline was cheaper than water, literally. A liter of gas cost $0. 01, essentially free. Here's where the first warning sign appeared, the one that every collapsing economy shares: they stopped producing anything else. Venezuela became a one-product economy. Oil represented 95% of export revenue. Food? Imported. Medicine? Imported. Technology? Imported. The country that should have been building industries, training engineers, and creating diverse businesses instead just pumped oil and spent the money. This is what economists call Dutch disease. When one resource dominates, it kills every other industry. The local currency becomes too strong because of oil exports, making it impossible for other businesses to compete internationally. Manufacturing dies. Agriculture dies. Innovation dies. But when oil prices are high, nobody notices. Everyone's getting rich. Why build factories when you can just buy everything with oil money? The pattern's first stage, resource dominance leading to economic monoculture. In 1999, Hugo Chavez was elected president. He promised to use Venezuela's oil wealth to eliminate poverty. Noble goal. Terrible execution. Chavez launched massive social programs called Misiones. Free food, subsidized housing, cash payments to the poor. On the surface, it looked generous. In reality, it was buying loyalty with oil money that would eventually run out. Here's the critical mistake, and it's the same mistake Rome made, the same mistake Weimar Germany made. Instead of building productive capacity, they expanded consumption. Oil prices in the early 2000s hit record highs. At one point, crude oil reached $140 per barrel in 2008. Venezuela's government revenue exploded. And they spent every penny, and then borrowed more. The government took over private businesses. In 2007, they nationalized oil production, kicking out ExxonMobil and ConocoPhillips. They seized steel companies, cement factories, supermarkets, farms. The theory: government control would ensure fair distribution. The reality: productivity collapsed. When you take over a business and replace experienced managers with political loyalists, output falls. The nationalized oil company, PDVSA, went from producing 3.5 million barrels per day in 1998 to less than 800,000 today. An 80% collapse in production. But as long as oil prices stayed high, the government could mask the destruction by importing everything. They were selling the house to pay for groceries. The pattern's second stage, government expansion funded by temporary high commodity prices, destroying productive capacity, then came 2014. Oil prices crashed from $110 per barrel to $30. Venezuela's government revenue collapsed overnight. But here's the trap: you can't cut spending once you've made promises. The social programs, the subsidies, the government payroll, all of it was locked in. Citizens expected free everything. Government workers expected their salaries. The military expected their budgets. The government had two choices: cut spending dramatically and face riots, or print money to cover the gap. They chose to print. And this is where the death spiral begins. The Central Bank of Venezuela started creating bolivars, that's the currency, out of nothing. In 2013, the money supply was 300 billion bolivars. By 2017, it was 10 trillion. By 2018, it was hundreds of trillions. The exact numbers became meaningless because they were adding zeros every few months. When you print money, you get inflation. But there's a delay, a lag between printing and prices rising. That lag convinces governments they can get away with it. At first, inflation was 20% per year. Annoying, but manageable. Then 50%. Then 200%. Then it went exponential. By 2018, inflation hit 65,000%. Not a typo. 65,000% annual inflation. By 2019, it reached 10 million%. 10 million%. What does that mean in practice? A coffee that cost 2,000 bolivars in the morning cost 10,000 bolivars by evening. Restaurants couldn't print menus fast enough. Stores stopped listing prices, they just told you at checkout because the price would change while you were shopping. The pattern's third stage, money printing to cover revenue collapse, leading to hyperinflation. Let me paint the picture of what hyperinflation does to ordinary people. Your salary becomes worthless overnight. You're a doctor earning 5 million bolivars per month. That was $2,000 in 2014. By 2018, it was $5. $5 per month. For a doctor. Doctors quit and became taxi drivers because they could earn more. Then taxi drivers quit because gasoline, even subsidized, became impossible to afford. Then people abandoned their cars because the car was worth less than the metal it could be sold for as scrap. Grocery stores ran out of food because farmers stopped selling. Why would a farmer sell eggs for bolivars that would be worthless tomorrow? They demanded dollars or barter. The official exchange rate said $1 equals 10 bolivars. The black market rate was $1 equals 6 million bolivars. The gap between official and reality destroyed all trust. The government imposed price controls, making it illegal to charge more than official prices. This guaranteed that shelves stayed empty, because nobody would sell at a loss. Hospitals ran out of medicine. Not because medicine didn't exist, but because pharmaceutical companies wouldn't ship products to Venezuela knowing they'd be paid in worthless currency. Malnutrition rates exploded. In 2017, Venezuelans lost an average of 24 pounds per person. Not from diet plans, from starvation. The Maduro diet, people called it bitterly. Over 7 million Venezuelans fled the country. That's 25% of the population. The largest refugee crisis in the Western Hemisphere's modern history. Bigger than Syria, proportionally. This is what currency collapse does. It doesn't just make people poor. It destroys society. Doctors become desperate. Teachers flee. The middle class vanishes. Everyone becomes focused on one thing: survival today, forget tomorrow. The pattern's fourth stage, social collapse as currency becomes worthless, destroying trust in all institutions. Now here's why this matters to you, wherever you live. Venezuela isn't special. The pattern they followed has been repeated by dozens of countries: Zimbabwe, Argentina, Weimar Germany, Yugoslavia, Hungary in 1946, Rome in the 3rd century. And the warning signs are flashing in multiple developed economies right now. Look at the United States. The federal government is running $2 trillion deficits. The national debt exceeds $36 trillion, about 125% of GDP. Interest payments alone now cost $1.2 trillion per year, more than defense spending. The Federal Reserve printed $6 trillion between 2020 and 2022. That's more money creation than the previous century combined. It's different this time, they said. Modern monetary theory proves we can print without consequences. Then inflation hit 9% in 2022. The worst in 40 years. The Fed claimed it was transitory. It wasn't. Look at Europe. The European Central Bank printed trillions through quantitative easing. Negative interest rates for years. Government debt across the EU averages over 90% of GDP, with Greece, Italy, and Spain well over 100%. Look at Japan. Debt at 250% of GDP. The Bank of Japan owns over half of all Japanese government bonds. They're printing money to buy their own government's debt. That's the definition of monetary suicide. The pattern is forming. Stage 1, resource dependence or debt-fueled spending. Stage 2, government expansion beyond sustainable levels. Stage 3. Revenue crisis triggering money printing. Stage 4, inflation spiraling into social collapse. Venezuela did it in 15 years. It could happen faster in interconnected modern economies. So what protected people in Venezuela? What survives when currency dies? First, those who held assets outside the system. Real estate, but only if you could defend it and pay taxes in worthless currency, which most couldn't. Gold and silver. But only small, portable amounts because the government tried to confiscate large holdings. Second, those who earned in foreign currency. If you could work remotely for a US or European company, you were wealthy by local standards. A $500 per month remote job made you rich when doctors earned $5. Third, those with skills that didn't depend on the local economy. Electricians, plumbers, mechanics who could demand payment in dollars or goods. Programmers who could work for foreign clients. Fourth, those who got out early. The ones who saw the pattern in 2012 or 2013 and left before borders tightened and capital controls trapped everyone. What didn't survive? Cash savings. Pensions. Government bonds. Bank deposits. Salaries. Anything denominated in the local currency evaporated. The lesson isn't to panic. It's to recognize patterns before they complete. Venezuela went from the richest country in Latin America to humanitarian catastrophe in less than 2 decades. Not because of war. Not because of natural disaster. Because of economic policy choices that followed the exact same pattern as every hyperinflation in history. Resource dependence. Government expansion. Revenue collapse. Money printing. Hyperinflation. Social breakdown. Rome followed this pattern with the denarius. Weimar Germany followed it with the Papiermark. Zimbabwe followed it with the Zimbabwean dollar. Venezuela followed it with the bolivar. The pattern doesn't care about your country's name. It doesn't care about your military strength or your natural resources. It's economic gravity. You cannot spend more than you produce forever. You cannot print prosperity. And you cannot debase your currency without consequences. The question isn't whether governments will try. They always do. The question is whether you'll recognize the pattern before it completes. Venezuela is the most recent example. It won't be the last. If this gave you a new perspective, subscribe. History has the answers, I'll show you where to look.